Good morning, everybody. We're joined by Phil Flynn of the Price Group, and he's also a Fox Business reporter. Welcome, Phil. How's it going this morning?
Hey, good morning. The Power to Prosper, Fox Business Network. We're doing good today. How are you?
Very good, very good.
Yeah.
It's a busy morning. We got a lot of news last night, and then this morning we had the Trump news. We had the API data out. Then we got DOE report coming out in a little bit. So I thought I'd touch base. And I saw your note this morning where you were talking about the price action in crude maybe bottoming. So I thought maybe tell me about that.
Yeah, I think we may have seen the low for the year. If you remember, last week we got a surprise increase in crude supplies, over, almost 10 million barrels of oil, and everybody was scratching their heads, and we saw the prices crash. But what was interesting, if you look at how bad the market looked just last week, we actually held some very key areas. Like the 200-day moving average. We didn't even quite get down there and touch it, and depend on whose math you believe. We came within, we either touched it or were within 30 so cents of the 200-day moving average. If you look at your October futures, you kind of had almost a double bottom last week. The low on August the 16th was 63.89. And then, of course, the day before it was 63.93. So on a daily chart, probably close enough for comfort. Also, too, seasonally this time of year, the market is really sticking to the seasonal script. And think about this. We had this big run up into Memorial Day, and then the big correction on Memorial Day, basically, because we're worried about the summer gasoline season. Then we rally into the 4th of July. And then a few days after, Trump talks about, OPEC needing to raise production, prices crash. We get into the dog days of summer in August, when the market isn't sure if it should be focusing on, record refining demand, or the fact that maintenance season is right around the corner, and you have this huge correction, in a correction that was probably exasperated by concerns about Turkey, concerns about China, which we believe was way overplayed. And so now, as you go to look towards the end of the year and you look at the seasonality of the years, it's very unlikely, unless we get some kind of a really bearish report today, or some kind of economic catastrophe, that prices are going to start making new lows at this point of the year. It would be very unusual. So I would say, based on the technicals, based on the seasonalities, and based on the overall supply and demand fundamentals, where they are today and where we expect them to be towards the end of the year, more than likely the lows are in. If you remember yesterday too, Mike, we did get that American Petroleum Institute report. It basically offset the big drawdown that we got, or the big build last week. That 5.17 million barrel drawdown was very large, especially for this time of year. And it kind of shows that maybe last week's big build was a fluke. Now, the people that I talk to in the industry and my contacts, and from some of the math that we've put together, we do believe that at 9:30, that number is when the Energy Information Administration releases their version of the report, that we should see that or even a bigger drawdown in that report. In fact, some of the whisper numbers that I'm hearing from my people think that the drawdown on the EIA could be as large as 10 million barrels.
Wow.
Now, the problem is that when you get these kind of guesses ahead of time, you may be right on your estimates, but the EIA may not get it into the report, in time. So it's always a gamble. There's no guarantee, but don't be shocked to see them double what the API did in this report today.
Wow, well, that'll definitely be something to keep an eye on in about 25 minutes. And it's interesting, crude right now is up 2.25%, trading at the high of the past about week or so. We're trading at 67.32 in OCC. What about, can you comment at all about the roll? It looked like there was a huge move in SEP OCC over the last few days. What were you seeing there?
I think on the September contract, we sold off really hard on the belief that we saw an increase in crude supply of almost 10 million barrels. But when it came time for the refiners to buy oil, there wasn't that much oil around. So you're really getting the tale of two markets. I mean, on one hand, you're saying on these reports, we had this big build in inventory, but when the cash buyers came to the market to buy oil, what happened? The prices started to go up pretty quickly. So sometimes the buyers of crude, the refiners that are buying, will put off buying because they assume there's a lot of supply out there. But then when it comes time to actually put up or shut up, it's all of a sudden you got a squeeze play. So we saw a dramatic run up in September. What that also probably indicates is that the market's a lot tighter than we thought it was just a week ago. And so if you're going to get a squeeze play in September, which was really leading the way, one might assume that October is probably undervalued. So actually, the squeeze on September started a couple of days ago.
Right.
Then the October kind of joined up, and now the back end of the curve is waking up to the fact that, hey, wait a second, maybe we were a little bit too complacent about the availability of supply.
Yeah. And, we're at the upper end of the range. Obviously, we have come down over the past 7 weeks from where above $70 in oil. But over the past few years, we're definitely at the higher levels that we've seen in the past few years. And we're starting to see news about, countries canceling flights due to higher fuel costs and things of that nature. What's your take on that sort of news and where we are in energy prices?
I think it is a bit of a concern because it shows that there is being some demand response to higher prices. But really seeing that a lot of it is happening more in the airline situation, it could actually turn out to be a bigger story about distillate inventories as opposed to the overall market. And American Airlines, I think, was the airlines that was in the Wall Street Journal today, cutting back on some flights due to higher fuel costs. But what we have seen in the market, and what I'm hearing on the physical side, there's a very tight supply of jet fuel. I'm getting phone calls across my desk every day from people that are trying to find or sell jet fuel. We're hearing from buyers representing countries, airlines, and so what has happened here, and I think this was part and parcel of the shale revolution, is that a lot of the oil that's being produced on the shale side isn't producing a lot of the heavier fuels, and because global demand for fuels in general have been very strong, the type of jet fuels that are being needed by the airlines have gone up in price and getting hard to find. Overall distillate inventories are below average for this time of year. Crude oil, which got back to average last week, could fall below average. But I do think it's something you want to watch, because one of the things that can slow down this long-term bull market in oil is a slowdown in the economy. And the thing is that if we start seeing a lot of stories that people are changing their habits because prices are going too up, that could be a problem with the longer-term bull picture. I think that the longer-term bull picture right now is still pretty well in place because we believe that the demand for fuels is going to stay strong. But it's going to be something to watch, obviously, as we go forward.
Yeah, absolutely. All right, so before we get you out of here, anything catching your eye in terms of short-term market moves, whether it be in the energy sector or anywhere, really?
I wish you would have asked me an hour ago. We were seeing a big move up in the products. RBOB gasoline really recovered almost all of its losses from last week. The heating oil, I think people are getting prepared for what could be a very bullish report. Obviously, if you get too excited about the report and it disappoints, we can have a bit of a pullback. I do think the other concern about the market is the overall economy. And, obviously the concerns that, the Paul Manafort conviction, the Michael Cohen plea deal, that could add a bit of uncertainty into the marketplace. It basically slowed down the stock market run yesterday from historic highs. And it is a bit of a concern because, whether you like Donald Trump or you don't like Donald Trump, the truth is his policies have been very market friendly. It's been very oil friendly. And it has been good for the price of oil. It's been good for demand. If there's a concern that somehow the scandal could increase the odds of a change in the leadership on the House and the Senate in the midterms, that could be cast a negative pall on the market. Because right now you've got business confidence at an all-time high. If that confidence gets shaken because of a switch in leadership and the possibility of higher taxes and a reversal of some of the regulations that have been lifted, that could really cause some concern and could put a top in the market. So I think this midterm, economically speaking, could be a danger to the bull market. But of course, we're still far away. We'll just have to look at the poll numbers and see if the market's really generally concerned about that.
Right, right. All right, well, good. Thanks a lot for the information. A lot of good, valuable stuff there. Let us know your thoughts after, as the day progresses. It looks like it's going to be an active day. We got crude up about 2.25%, RBOB up about the same, and we have the inventory numbers coming out in about 20 minutes.
Thank you.
All right, talk to you later, Phil.